Hi everybody, this is Hannah J with RealEstateSINY.com, and I'm here to sit down with our broker and co-owner, Anthony Licciardello. How are you today?
I'm doing good, very good.
Awesome.
The holiday season's here. It should be a nice festive time around here in the next couple of weeks. So it's good, everything's good.
Certainly, we're looking forward to our holiday contest. So, well, not holiday contest, we're doing a holiday
Appreciation.
appreciation.
Yeah, we've kind of dropped the contest part of it. A little too much contest and
It's
in
gonna
a peaceful
be
season.
less competition, more fun this year. So
Right.
check out our highlight reel that we make of some of the most beautiful holiday homes on Staten Island.
Yes.
Coming out toward the end of December.
Check out hashtag holiday SINY. That's the hashtag, that little number thing. So if you type that in along social media channels, you'll probably catch up on some stuff there.
Yeah, and feel free to enter your home as well if you think that we should be featuring it on our social media channels.
Yeah. So speaking of homes,
Yeah, let's get down to business. So we're here to talk about real estate statistics for the most recent data that we have, which is for the month of October 2017. You know, it's been quite a wild ride over the past few years in Staten Island. A lot of wacky things happening in the real estate market that are kind of unprecedented. So the first thing I kind of want to talk about is October saw a really large listing increase over October of 2016. So we saw a over 20% increase in new listings in October this year since October of 2016.
yeah.
Versus the previous month, September, only saw a 10% increase. So this was double the previous month's new listings increase numbers. So do you think that's just a fluke, Anthony, or what's your take on that?
I think it's not a fluke to the degree that we measure these things in. So there is definitely some additional coming off the fence for many home sellers over the last few months. So inventory numbers have gotten better. The amount of sales have also improved. So there's a pent-up demand for this stuff. So the inventory numbers, I think, is a reflective of the fact that home sellers feel like now they've developed a little bit better equity positions in their homes, which is allowing them to kind of take the leap forward. It's still, I think, again, it's still a very small sample size to make, pure adjustments. When you talk about the numbers being as low as they are, when we talk about 20% of, maybe 900 to 1,500 homes,
About
yeah, it's within that range, but you're not talking about like these as big as the number sounds when you say 20%. So yeah, it's definitely there, and there's some willingness on the part of sellers to kind of, maximize what the market's presenting to them. But it's an interesting path from the time of the economic crisis till now about how inventory numbers have changed so much and how they've dropped precipitously since then. And there's probably a lot of ways to reflect that from just people's economic status from that time till now, uncertainty. But it's definitely showing that there is some signs of health in people's perspective that it may be a good time to sell right now. So that's where we're at. And
Okay.
we're looking, I don't see any drastic improvement in these numbers. Even if it's 20% this month, I don't envision that. The way I would predict a healthy market to be adding homes is still probably what I would say below par, even with the 20% increase, for what I call to keep the affordability portion of the market intact. So I still think there's still a ways to go there.
That makes a lot of sense. I mean, when you have maybe an active listings being only about 1,000 homes on the island for 500,000 residents here, there is a small degree of change is gonna look like it's a large change. So
Right.
that 20% number might be misleading just because the sample size is so small.
But yeah, again, it's something that you know, we can't say it's not an improvement. It is if that sustains. I mean, it's a few months into this.
Do you think it will sustain?
That's that's a difficult to predict on a few different levels. I think it's barring any changes to the broader economy. It might change, but I don't see it changing much. Again, one of the things that it really becomes, which we'll get into in a little bit, is the affordability portion. Does that change? Does that change people's ability to get more for their property at a certain point? Are we reaching a threshold where the market cannot sustain any more growth because the available income for these properties will eventually dry up? But we'll get into some of that. But I don't see it changing drastically. I don't think we're going to see anything drastically change in terms of, there may be a few more houses on the market. It may gradually grow. But we'll have to see, let's see if it develops a trend over a course of maybe, 6 months, 8 months, somewhere in there. And we'll see exactly how that plays in. And we'll definitely report on those things when they come available. But I do believe that at the heart of it is probably homeowners at this point, I believe to a degree, are a little bit late to the arrival of this. So it's kind of, they've really waited to make sure that, they were going to get more for their house. They've heard enough of the stories to feel confident about doing it. So that's why probably where you see the jump. But the question is the broader economy going to support that? It becomes a secondary question here.
No, totally understandable. I mean, there's a lot of uncertainty. Economic climate over the past 10 years has changed so much.
Yes.
And so I'm going to take that and run with it into my next question, which is the market on the North Shore of Staten Island versus the South Shore of the island. So basically in 2016, the North Shore saw a price spike and it pretty much came down right away back to around where it is now, which is around $400,000 for the median home sale price. Whereas the South Shore of Staten Island has pretty much seen, an increase definitely in home prices, but a more stable upward slope, not as all over the map as the North Shore. So talk to me a little bit about what's going on with the market on the North Shore, Anthony.
Well, I mean, you being from the North Shore, obviously one of the biggest things with the North Shore was the amount of new development in the St. George area, the Wheel, it's Empire Outlets, all things, all these things have come into play in terms of the speculative market that exists there. So so when we talk about those spikes, the spike is some of the speculative investment that's taking place there. So it definitely
the revitalizing efforts for the North Shore.
Yeah, so there was an exuberance about these projects taking place and to get in while the market was good before these projects were actually fully implemented. And the interesting thing is in the same numbers, you see these dips again, right? I think it was one of the things that you mentioned. Yes. And the dip is that the New York Wheel obviously, it did not, it's not looking too good at the moment. While it's difficult to say exactly where that is in the future, how that really thing for the North Shore perspective is really how does that impact not just the area market, but how does that impact the influence of the Staten Island market as a whole, because it was such a large scale project that even a lot of investors came from other boroughs, came here. Jacked up the prices. Is there another effect that's a little bit broader? I don't think so. I think it's limited in terms of if it's not going to continue, how much the market will draw back. It's shown that it's drawn back. I think that's what you saw in your statistics, and that's what I've kind of observed myself, which is that there's a drawback. And like everything else in speculation, there's probably some degree of concern there. So I do expect that there should be a certain pullback, or there will be a pullback. How substantial that is, it really depends on where exactly the properties are located, what part of The North Shore is more impacted more. Obviously, in the section near St. George, will be impacted more than any other place.
Right.
I mean, St. George, and being a longtime resident of Staten Island, St. George has been familiar to these types of projects. They
It's
kind of,
just so up and
it's,
down over the
yeah.
years.
I mean, you could talk about 40 years of ideas that have come up and down there, and even when the wheel came, not to be generally skeptical, but I have mentioned in the past that until it's up, I won't believe it. But I mean, that was my take.
And I'm starting to believe you saying that too. I think people are living in that area are very upset about the disruption that all this construction has caused.
Yeah.
And they're not really seeing the payoff for it right now. So.
Well, they're really not going to see the payoff, because if the project doesn't complete, the appreciation of values is definitely going to be impacted. So that's really at the core of the issue. That's the impact, and you know, it's kind of it's a mixed bag when you get into these development projects. Do these things impact, you know, the residents there? Does that impact values? The funny thing is even with those impacts, it's not substantially, the values have improved because of that. But you know, that's a issue upon its own, has its own merits. But what you're looking at is definitely the speculative environment, and the idea that all this would come to fruition is kind of taking a step back. The developers on the project have obviously not worked some things out amongst themselves, and where that stands is obviously, I can't give you the latest report. The last is it's in hiatus, and you know, so, but it's an interesting how that impacts, which is the Empire Outlets, which is, I believe, the project is moving forward there. But the draw factor of the wheel not being there,
Yeah.
how does that impact the retail sector that's happening down there? This is a story that has a lot of facets to play out. And, you know, I am sure the developers of that project now that, I mean, we're talking a huge amount of capital investments here.
Yeah.
$1 billion, it's close to $1 billion in capital efforts there.
It's a public-private partnership.
Yeah, and
And I do know, I read that Black Friday of 2017, I believe, is when Empire Outlets was actually set to open.
yeah, I mean,
It's so up in the air right now.
it's
This is New York
really-
City's first outlet mall, and I was excited about it. Maybe I was naive to be excited about it.
but it's definitely it's a big news story from the real estate perspective. It's probably the biggest one of the last decade since the housing crisis began, and its impacts with that. And so, I mean, you're talking about a huge, large-scale investment, never seen before, and the overwhelming speculation, and now the pullback. How does that affect? Well, that's really that's. I am sure there's a lot of sleepless nights in St. George over some of the types of investments.
That.
Yeah, I mean, there have been purchases in the residential sector around there, with the hopes that rezoning would result in higher density housing and building and construction. Not to say that those projects won't happen. The question was that draw of the wheel. The wheel was basically kind of like the light post for St. George. So we would draw those people who would not come to know St. George, draw them over into the shopping. What's that over there? You know, let's go to Staten Island, let's go see what that's about. To now being an outlet mall, and it's going to be interesting, to say the least. I mean, I'm sure, like I said, it's a boondoggle of sorts to sort that out. From a real estate perspective, though, its failure, or if it's completely failed, I don't know yet. There's some people that say it's not, some people that say it is. But at the end of the day, the continued delays are really going to hurt. Yeah, I mean, that have found appreciation through this project. So, and again, I believe it'll be more limited to that area. It will have a broader effect depending on how much of that purchasing was speculative based. So that's something that's a wait and see, but it's a wait and see as of right now on the downside of the real estate economy.
Well, being that North Shore homes are more affordable, and the fact that there are things that are changing for the better is debatable. Do you think it's a good investment to buy a home on the North Shore right now?
I think look, I mean, the funny thing is you talk about home investment and home. I mean, I think when people talk about home ownership in general, is it an investment? Well, it's an investment in the place you live. So, and I think, if you're looking for a place to live, it's absolutely a place to live. There's no doubt about it. It has its qualities. It has its walkability factors. It has all those things. So it's definitely, there's no doubt about it. I mean, the North Shore continues, it still continues in emergence from years past. I don't see anything on that side that says, well, if I buy here, is it a good investment?
You don't see it really plummeting in the future?
No, I mean, no, not at all. I think that at the end of the day, while speculators may have their day at this and it may cause a little pullback, things will settle out where they should. I mean, it's just the law of economics will take care of the value equation. You're just not going to get that, that kind of speculative value. And that's where people have to understand anything about real estate economies, is that, that's where real growth potential exists in home values is, are these projects going to bring in better scale jobs that are going to create better economies of scale to help support prices versus, just speculative investment. So there's still a high demand because it still remains the lowest cost borough of the five. So there's always going to be this push to stay within the city limits and continue to have a affordable New York standard of living. But it has some tumultuous times to work through for a little bit. I'm going to specifically say that it is. I believe it's isolated to the St. George area, maybe into New Brighton a little bit, but I don't see it being a broad North Shore community spreading out, stretched over the whole entire area. But I think
we don't have a train yet.
No, yeah, that would probably do a better job of raising values. Yeah, better than the Empire Outlets. But look, I mean, it's a place that's obviously seen the greatest growth appreciation. It did appreciate faster than the South Shore. When we talk about North Shore, South Shore, basically talking about the Staten Island Expressway north. Exactly. And everything else being south. So,
right, Mid-Island kind of being lumped in.
Yeah, Mid-Island, we're trying to simplify it, is that really the dividing line between North and South Shore Staten Island being the expressway.
Yes. So you touched on affordability, and the last main point that I want to talk to you about is exactly that, home affordability, and kind of how its history hopefully won't repeat itself here. The median home price in our most recent data is $532,000. Mm-hmm. And your mortgage is going to vary a lot based on your down payment, but this is going to be, for someone with not a ton of equity, it's going to be around $3,000 a month for a mortgage. So, if we look at incomes in the area, this is not a healthy affordability factor. Do you fear that this might lead to another foreclosure crisis like we saw back in 2008?
No, I don't, because here's where the housing affordability becomes the issue. Not to say that housing foreclosures can't happen. When we talk about at scale is really the question. Will it happen on a scale? If there is an economic downturn, will it happen at the same scale? No, because the fundamentals of the mortgages are better set. There has to be better displays of income. You're not allowed to. You still.
You're not going to take high risks.
Yeah, I mean, you were dealing with. You weren't just dealing with speculative investment. You're dealing with speculative investors, meaning that the banks speculated on the people on the mortgage side of it more than they were on the value of the homes. So they just assumed that people would pay it. No income verification. I mean, it's two separate factors. The one thing that you have to concern yourself with when you talk about housing affordability is there is no doubt about it, as that continues to push, I don't think you're going to see the appreciation, and we've seen it over the last few months, has slowly, steadily normalized itself and kind of flattened out. It's beginning to flatten out based on the latest statistics. So, you know, values are beginning to flatten out because of that one factor. The real estate economy over the last, I'm going to say over the last 6 years, has been basically interest rate driven. So, you know, because when people look at it from an affordability standpoint, they're looking at it from, hey, if I have a 4% mortgage versus a 6% mortgage, what's that monthly number going to be? So housing affordability as far as price of the home, important. My concern is like raises in interest rates, and this is a really difficult kind of thing to navigate, and from the perspective of the economy as a whole, there's been a very high dependence in the economy on low interest rates to solving the problem. But everybody's kind of experienced the costs of everything extremely rising very quickly. So it's like there's this inflationary factor involved with the economy, because costs are rising extremely fast. Incomes are not rising fast enough to support them. And a lot of it has to do with borrowing being so cheap. So because of the borrowing being so cheap, the inflated amount of dollars that's in the economy is kind of, you know, lowering value a little bit. So the real question becomes for the health of the real estate economy is, you know, at what point does this balance itself out? And because these are artificial measures that were put in, and I hate to say this, we still are in, while they say the recovery period from the Great Recession is maybe considered over in most people's minds, it's not. Because there was so much quantitative easing, there was all sorts of, keeping rates at historical low numbers. I don't believe the economy right now, and I think that the big fear of raising interest rates is that even the Fed and many of the decision makers don't feel like the economy could sustain the smallest increase in interest rates. So you start to affect that into the housing market. I think from that perspective, I mean, you could really hit a housing market hard just on a couple of point increase, from going from 4 to 6% can be a difference between maybe 10, 15% of value of a house. So you're talking about adjustments that it could be huge. And that's where sellers have to really put their heads around, is that, they look at value from the perspective of, I'm going to get a lot for my house now. What they're not considering is that if there's a substantial change in rates, that's going to impact their value. There's no doubt about that. I have no question in the world that any, even if it's a half a point increase, it will begin to take a toll on the economy because of that affordability factor being so high.
So ridiculous.
I know we debate this all the time, whether it's astronomically. I mean, people do this for varying reasons. The changes of how home ownership is taking place, which we've discussed earlier, is the buyers today don't necessarily purchase a home on their own. We've seen a rise in the amount of families purchasing a single family dwelling. So one family will come in and the rest of them will support, by some degree or measure, a portion of the mortgage.
Which is why pretty much every home, I don't want to say pretty much every home, but very commonly seeing either 2-family, even 3-family, or a mother-daughter style layout where someone can have their own apartment on the bottom level of the home.
And for proper disclosure, there's no such thing as a mother-daughter. That's a insider's term to say the apartment is not registered on the, you know, as a building standard.
No, and it's not a legal apartment to rent out to a separate tenant. But it's an area that can be comfortable for, you know,
Yes,
let's say
the additional house guest.
yes.
The overnight house guest. But it's definitely, yeah, you see them. And the funny thing about the housing market here is that it is substantially 1 and 2 family detached or attached or semi-attached housing. So, you know, you don't have like many 3 families available.
But you're seeing essentially more and more people in the past decade that are multiple families that are buying the same house than you did previously, before that.
Yeah, I mean, this is a rise in the changing of how housing affordability is being met. So you know, if you think about you think about some of the housing prices and you think about how much it costs to maintain living, it's better that some, you know, we've seen it. I mean, you know, I haven't, you know, we kind of measure that just based on personal experience. I could probably, it's very difficult to determine in actual numbers. That's not like a recorded factor in managing data for real estate transactions, is how many people are actually involved. One person could hold the mortgage and the rest of the family just supports the mortgage. So you don't have the actual, you never get the actual number, but I could tell from just my experiences that has been a steadily increasing factor. You know, maybe 2, sometimes 3 families living in a single family unit, you know, and people find other places to sleep as part of their arrangement because
That's
housing
what we're looking at to
affordability.
be able to
Yeah,
afford a
but
house.
yeah, and that's the harsh realities of the housing market.
A $600,000 detached house is
Yeah,
kind of
it's
the
all-
entry level of what we're looking at in a lot of neighborhoods.
Yeah, I mean but it's being purchased, so that's you know, we can't the
Sellers aren't suffering here.
no, they're not, and they're not going to suffer as long as New York is still a vibrant city, and the hope and opportunity is that it's still, you know, like I said, everybody pays their price, is whether they want to. You know, so it really comes down to do these people believe that this is where their future lies, and you know, they take extraordinary measures to get housing in some instances, but it's part of the real estate economy. I believe
Only
it.
a little chunk of this valuable city means a lot to people, I think.
Yeah, I think just getting in the door is the first step to, you know, if they don't get in now, is it going to be $1 million in 2 years? So,
Like Manhattan and Brooklyn.
right. I mean, you look at those places and you say, there is not probably a.
They pretty much didn't get touched by the recession, am I correct?
Yeah, I mean, New York.
values
I
anyway.
really don't think if you take New York as a scale, even some people will even say Staten Island. When you look at, in terms of the Great Recession's impact on, just say, New York's real estate economy, there was some blips, but by far and large, there was nothing. This is, you know, I think people want to
live here.
some people see a 10% decrease here as being a huge deal. When you went to other parts of the country, it's 50,
50%, yeah,
even more,
exactly.
60, some places 70. So you're talking about like we've gotten past. We're at the highest point in home values since Staten Island is had a real estate economy. So it's again, it's really it's as we get new residents coming in. Provided that the broader economy doesn't change, interest rates kind of remain the same. The last factor being affordability, which I'm telling you now that's going to settle itself. But I would tell you that at this point of the game, I don't see sellers really extending much further in value, just because the broader economy has not caught up wage-wise to do so. So it's just not, it's not a sustainable, and the banks aren't going to lend to that. You got to remember, the banks are lending to people who would essentially have the means to do so. It's not like the past. So, you know, but if you have a hurting economy and people lose jobs, yes, it would be like any other downturn in the economy. Definitely not as substantial as the one before, but you know, there is there has to be at least some idea that the economy has been in a growth cycle, whether real or artificially, it's in a growth cycle. And every economy, you're not going to have a consistently growing economy for 10, 20 years straight. It's kind of the dips and valleys, dips and valleys, dips and valleys. We haven't seen the dip in a while. I mean, we've had a couple of them here and there, but nothing like that really should be playing a factor, which is, to be honest with you, a little bit on the nerve-wracking side, because I think well, yeah, like it's 2000, you're talking 2007, 2008, when things really started to take a tumble. It's 10 years from now. The cycle has to have a retrenching at some point. So this doesn't, history repeats itself, and
so
you can't.
Live within your means.
Yeah, it's like, yeah, live within your means, but the broader economy for real estate is definitely there for homeowners. And they have a definitely, I mean, for Staten Island is moving, you know, even outside of Staten Island into New Jersey, you know, you're talking about markets that still haven't really grown as fast as here.
Definitely.
So there's,
which is most of the country.
yeah. So I mean, the growth rate here has happened much faster than other places. So the affordability, if they're moving out of state or they're moving out of New York City, becomes that much greater. They are getting more on this end than they will have to pay for similar on the other end. So from that perspective, it's really good.
Alrighty, well, I think that about wraps up all of my questions for you.
And it's another interesting talk.
Yeah, I know, and there's a lot more where that came from, so definitely look out for a video next month, and our statistics blog as well, which goes into the details numerically a little bit more.
And they can go on to si-dex.com, sidex.com.
To read my statistics reports.
To read the statistic report, and you'll definitely get a little better insight into the details we just talked about here. So I guess until next time.
Until next time, if you can afford a home, buy one.
It's a great time to be a seller in this market, but stay tuned as we give you a better insight into that in the coming months.
All right, thank you.
Take care.